We are all trying to outsmart each other, right? We all try to buy low and sell high, and there are some models that are useful, but not all of them work forever. I want to talk about some mathematical models that used to work for Bitcoin, then stopped working, and I want to talk about the models that I use now. Now, not so long ago, people thought that the 200-week moving average is the absolute floor for Bitcoin. The idea was that since Bitcoin goes in 4-year cycles, that a holding duration of 4 years is sufficient to always be in profit. In other words, the price should always be above that moving average. And this used to hold true for a very long time until it didn't. This is when the model broke. And so then the big question is, what do you do when something like this happens? You expected Bitcoin to already bounce at 22K, but then it falls down to 16K. Do you call it quits and say that Bitcoin is over? Or are you actually going to buy? Just based on this single model, right, the 200-week moving average, it does not make sense to buy because now a pattern has suddenly broken. That's why I think it's important to use several models. They can all give us a range whether or not something is cheap or expensive, but patterns can break. Or have a look at this. This is the 2-year moving average, this time a multiplier. Whenever we are below the 2-year moving average, it might make sense to buy. Whenever we are above 5 times the 2-year moving average, it might make sense to sell. But here is why I believe this model is breaking. In the early days, we have seen how during bull markets we tended to overshoot that red line quite a bit. That overshooting tended to then get less and less over time. So this is not necessarily a good indicator for a long-term ceiling, right? With the very first cycle, one might have sold Bitcoin already at $4 when it subsequently went up all the way to $29. So Bitcoin comes down over time. It doesn't extend that much anymore from the 2-year moving average. And so I believe that it's quite unlikely that we're going to hit that red line again. So this can be useful to a degree, not necessarily as a selling signal, but at least it tells us that we should probably not wait until we hit $243,000 before selling Bitcoin, because with the last peak at 55K, we only barely touched that moving average. Here's another model that a lot of people believe in, but I personally don't think it's useful. It's the stock to flow model published by Plan B. And the idea is that Bitcoin becomes more and more rare over time because of the Bitcoin halving. So less and less Bitcoin gets mined over time. And because of that rarity, with every halving, the price should go up quite a lot. To be more precise, by almost a 10x every 4 years. Now, why do I think this is not a good model? Again, a very similar argument compared to the 2-year 5x multiplier line. Initially, we overshot by a lot. So this is a 7x overshooting versus the model. And then we tend to overshoot less and less, and we barely reached the limit with the last bull run. If we're overshooting less and less, then the returns are probably diminishing more than the model is anticipating. Thus, I don't think that we're going to hit the 400K anytime soon, even though the stock to flow model is predicting that. I think this is overestimating the upside potential. And so those are all models that are to a degree popular, but that I believe are too optimistic. It's very important to sell on time. If you don't want to just buy and hold and you want to go through the crashes, if you actually want to ride the waves to a degree and you want to sell somewhat high and you want to buy somewhat low, then you have to sell earlier than others. And thus taking the diminishing returns of Bitcoin into account is very important. For example, here, this is the Bitcoin rainbow chart. And again, the same problem. It's a regression on top of Bitcoin. And we've seen how in the past things overshot quite a bit, how we didn't even reach the upper bound last time. And so I think it's very, very unlikely that we're going to hit the upper band this time. I think the upper bands are pretty much useless. We are not going to see 700K. At least I would be very, very surprised. We came from outside of the upper bound to less outside, to barely reaching it, to not reaching it anymore. And so the slope of this line is simply too steep. We're not going up there anymore. There's also the other extreme, right? I get asked about the fear and greed index regularly. And I don't think it's a good indicator, because if you're selling whenever the greed index is high, then you miss out on a lot of upside. And when you're always buying when it's only fear, then you might still go down by 70%. I've even backtested this indicator once, and unfortunately there's really zero alpha in it. Bitcoin moves in trends, and so what I use for the medium term is, as I told several times on this channel, the 120-day simple moving average. But I'm not going to reiterate this here in this video. Now let's talk about mathematical models that I believe are still relevant, that still works. And they still work because they are anchored in human psychology, and that psychology is going to stay. When you're buying an asset, you always look at the current price relative to the price that you purchased it for, right? Are you currently in profit or are you currently in losses? When you're currently massively in profit, you might consider selling. When you're currently in losses, but you still believe in the asset long term, you simply keep on holding. That means when we extrapolate this to the entire market, it's important where that anchor point is, right? What is the reference price? What did the market on average buy Bitcoin for? Is the market currently a lot in profit, or is it currently a lot in losses? When it's in losses, it's unlikely going to sell that much. When it's in profit, profit might get taken. And so here we've got the net unrealized profit and loss. And this is of course oscillating with the Bitcoin price. And whenever the market in aggregate is strongly in net unrealized profit, it might make sense to take some of that profit. And when the market is in losses, it might make sense to buy against those losses. And I do believe that this oscillator will stay relevant for a while. Yes, the swings might reduce over time, right? We have seen slightly higher peaks in the past compared to today, but in general, it makes sense to rather sell when we are in euphoria, greed mode, or in belief mode, and it makes sense to buy when we are in capitulation. Have a look at this. This is the percent of addresses that are currently in losses. It might make sense to buy whenever a lot of people are in losses, right? For example, here, when Bitcoin was at 16K, half of Bitcoin addresses were in losses. Now only 6% of addresses are in losses. Or here's the exact opposite, right? Percent addresses in profit. It makes sense when there's not so many people in profit to buy, right? When half of the people are in losses and half of the people in profit, then we've got somewhat of a balanced buyer's market. Bitcoin is a system that transfers money from the inpatient to the patient, right? This is a very common saying, and we can actually see this in the data. Whenever a lot of Bitcoin supply is held by short-term holders that have just recently bought Bitcoin, that's also the point in time when Bitcoin's price tends to peak. And whenever Bitcoin's price is relatively low, that's when most of the supply is held by the long-term holders. And this is why I like Bitcoin so much. That's why I prefer to own more Bitcoin compared to stocks, because we can actually look at that data. We don't have this for the stock market. This is the short-term holder supply. Whenever this is very, very high, the market is super heated and we're just waiting for it to cool off. Whenever it tends to be low, it's a better time to buy. We are not at extreme levels of short-term holder supply, but we're definitely not low either. We can also look at how much capital has been realized, right? How much profit and loss has been realized. And again, we segregate based on holding duration. And whenever a lot of the realized cap has been generated by the short-term wallets, so this is now wallets up to 12 months, we tend to be very hot in the market. We can also go even shorter in the duration. This is now up to 6 months. Again, we are not at super high levels, but we are not very cheap either. When the 4-year cycle peaked in the past, we were above 80%. Now we are at roughly 60. So this tells us that there's maybe still some upside potential for Bitcoin, but it also tells us that it's not very sensible to be completely over allocated. Owning other assets besides crypto does make sense. And so since the potential gains are rather in the short-term momentum and they're not in long-term cheap prices, how does this actually look like? What's the short-term average cost basis, for example? So we are not looking at the realized price of the entire market, but instead we're looking at the realized price or the cost basis of the short-term holders only. And what is very interesting is that when the short-term holders are in strong losses, we might turn around, we might stop a bull market. So we've seen this over here, we've also seen this over here, and currently the short-term holder cost basis is at $88,000 per Bitcoin. Now I haven't backtested this approach. I don't know how well this line works, but what I did backtest is the best moving average, right? So when we buy, whenever we are above the moving average, and when we sell, whenever we are below, then the 120-day simple moving average is the best. That's currently at 82k. So once we fall below that 120-day SMA, then I will de-risk massively as well. I've already sold some of my Bitcoin at 96k, and I am selling the remainder once we fall below. Now, here is the problem. Here is why most people get wrecked during times like this when everything is going down. The issue is most people only have a strategy for rising prices. When there's a bull market, the strategy tends to be, I'm just buying the trending altcoin and trying to make as much money from those rising trending altcoins as possible. But then the issue is, what happens when things turn around? What's really the strategy if we enter into a bear market? The problem is most people don't have a strategy and they simply just cling onto their altcoins, getting wrecked in the process. There's no real objectivity in the process. It's really important to have some kind of a plan, what to do and where to deploy the capital if things are not bullish, because there are ways to make money in bear markets. When Bitcoin is expensive, when stocks are expensive, when everything is expensive, there's, for example, the option to buy gold, right? After the dot-com bubble, gold outperformed regular stocks by almost 800%. So this is a gold relative to the S&P 500 chart. This is actually not what we associate with gold, right? With gold, we associate very low volatility, a very boring investment to just park the money to potentially protect against inflation. But it's not necessarily seen as an asset that can outperform during a bear market. But obviously, this relative valuation does matter. It's quite a bit of a move. And so if you're not too much invested emotionally, then you can potentially, when times are right, move into assets like this. Now, this is a very uncommon chart, right? Most people have never looked at gold relative to stocks. People just look at US dollar charts, and this is the problem. It's knowledge like this that I believe can give us a real market edge, because the US dollar is obviously devaluing over time, so everything tends to go up over time. But again, it's all about opportunity cost. And so have a look at this. This is a technical analysis course, and over here is one of the videos plotting relative valuation charts. In total, there are 26 videos in this course. And relative valuation charts are useful in all kinds of contexts, right? It's useful to compare gold to the S&P 500. It's also useful to compare an altcoin relative to Bitcoin. It's also useful to compare, say, an asset relative to the money supply to see, does this asset long-term actually outperform monetary expansion? But then there are also other strategies, right? Because most altcoins underperform Bitcoin most of the time. I believe that the bear markets are actually better opportunities to make money than bull markets. In bull markets, we have to find the precise few altcoins that concentrate all of the gains, and we have to exit quickly enough. In bear markets, actually in general, but especially in bear markets, most altcoins do worse than Bitcoin anyways. So we can simply bet on relative valuations going down. We can bet on an altcoin to do worse than Bitcoin. We are not betting on the US dollar price going down. We're just betting on the altcoin doing worse compared to Bitcoin. So for example, this is a position I had open for a long time. This is Balancer, so the Balancer token, that's a DeFi project relative to Bitcoin. And this underperformed very constantly under low volatility by now 98%. And that's, I believe, a very nice approach, right? Why does Balancer underperform that constantly? It's again what we see time and time again, right? It's token allocations to the insiders and to the team and to venture capitalists and maybe to users of the platform. So supply is growing and growing and growing. The demand isn't growing as quickly, and thus we see that underperformance. Now, it's important that this is relative valuations, that this is not just US dollar valuations, because the US dollar valuation of an altcoin, even during a bear market when we see a temporary rally, can of course go up, right? When Bitcoin goes up by 30%, then temporarily an altcoin can also go up by 20%, even if the supply expands. That's why the relative valuation makes so much sense. Because check this out, this is now Balancer relative to Bitcoin since 2023, and here is Balancer in US dollars since 2023. This is much more risky, right? This can go up by 100% if you time this not the right way. So I'm not saying that most altcoins go down all the time. I'm saying that most altcoins underperform Bitcoin most of the time. And so shorting altcoins is a pretty nice way to make money during a bear market as well. So we don't have to cling on that strategy to always buy the meme coins, and then when the market turns around we keep on holding because we hope just that it continues a bit further. We can be objective about it because we also know a strategy to make money during bearish times. And so here's one of the explainer tutorials gaining from relative valuations, how to short balancer and potentially long other assets at the same time. This is one of, I believe, 5 different videos on shorting. How can we select an asset that's worth shorting? What kind of parameters do we have to look at? How can we also then set up that short, right? What are the technical requirements? What platforms should we use? And all of that is part of the premium membership of this channel. There's more than 100 tutorial videos in total. Feel free to check it out. Of course, I'm also sharing my own trades in premium. So I've just closed my short of Ethereum relative to Bitcoin. I made some money with that as well. And when times turn bullish again, then of course it does also make sense to buy individual alts again. That's why we've got the individual chats on various altcoins as well. But again, right now it might make in some ways more sense to learn about strategies that are not that common, that can make us money while most other people don't make money. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.